it's Dan here. In this week's episode, we will analyze the financial performance of the tech company Uber. To do so, I will use all my knowledge from my master's degree in finance, plus my 8 years of experience in the financial industry and as a financial analyst. And I will show you how in 15 minutes you can easily read a company and understand how the company has been performing over the last 2 years, 2019, 2020 in this case. So a little bit of backup information for you. Of course, you all know Uber, but Uber is actually two companies. Uber is kind of the taxi business you all know, going from A to B, the cheaper than a taxi. And also it became also a very big Uber Eats, Uber food delivery service, okay? So when analyzing the financial performance, we will look at both combined. And what is also interesting is Uber is of course a very fast growing famous company that has been set up in 2009, so about 12 years ago. And also important, the IPO of Uber, so the initial public offering of Uber took place in 2019, which means that today it is a publicly traded company. Before 2019 it was a private company. Now it is a publicly traded company. What does it mean? What does it change for us as a financial analyst when we look at the data? Well, publicly traded companies are obliged to publish a lot of financial information to anybody, because as a publicly traded company like Uber, like Facebook, like Apple, anybody can buy your shares because you're on the stock market. That's why you have to publish it to anybody. As long as you are a private company, let's imagine Uber like in 2018 or something, it's less strict, and usually you do not have the obligation to showcase or to show your information to everybody. So it's much more difficult to get reliable financial information about private companies. Start with the analysis on the computer, and you will see I will go step by step, and it's going to be pretty simple and amazing. See you in 15 minutes, guys. Bye-bye. We are now at the Uber investor page. Uber is a publicly traded company, so the financial information is publicly available to everybody, not only to the investors, but also to the market in general, meaning to the potential investors, to the employees, to the clients, to everybody. So let's dive inside. And what I do first, always, if you want to have a quick look at how a company has been performing over, let's say, last year, the first thing, don't get crazy about everything which is inside. Focus first on the cash flow, and I will explain you step by step why it's so important to focus on the cash flow. So let's dive into the thing and focus on the cash flow. Let's go down a little bit, and you will see at some point, usually it's further below. They're hiding it because they know the truth is inside. So let me find this is the balance sheet here. We'll talk about it later. And here comes the cash flow. So quick lesson about the cash flow, and I will tell you step by step what these numbers mean and on what you should focus. So first very important thing, don't freak out because you see a lot of stuff that you don't understand. You have to think big picture. You want to understand what happened with Uber in 2020 and in 2019. We have the comparison. So if you look at the cash flow will tell you one thing. It will tell you, did the company burn money or did they generate cash? This is very important. It's not about profit in the cash flow. It's about cash flow. So it means, did the company burn or generate cash? So we are looking for this answer. So forget all this stuff above here. We will look at three very specific lines, and I will explain them one by one. The first line that always comes, basically which is the first category, is always the operating cash flow. So the operating cash flow has all different types of names. Here it's called net cash used in operating activities, but in generally we call it operating cash flow. So what do we see here? So this is 2019, this is 2020. So first of all, we see that the numbers are negative. Negative numbers in the operating cash flow is always a bad sign. It means that the activity, so the business, is not generating cash. So the first information, very important, is that Uber is burning cash. In 2019, a lot, 4.3 billion. The numbers here are in thousand millions, so 4.3 thousand millions or 4.3 billion US dollars. So you can see in 2020 they are still burning 2.7 billion dollars of cash, which is still a lot. So basically, it's the first very important information. They are not making, or they are not making any money from their operating activity. So this is kind of an alarming sign, but it's not surprising, because when you look at all the ride-hailing companies, especially Uber, Uber is about 11, 12 years old, and they have never been able to generate any cash so far, which is kind of alarming for the investors. But apparently the investors are pretty have a long breath, but let's try to understand why this operating cash flow is negative and why this company is burning cash. So we could go into all the detail, but let's focus on the big stuff. And the first thing you have to understand is, why can a company burn cash? Well, let's look at the first line here in this indirect cash flow, and you will see net loss, including blah blah blah. It doesn't matter, but net loss means they were not able to make any profit. Okay, so that they made losses, 8.5 billion of losses in 2019, 6.7 billion dollars of losses in 2020. And what you have to understand, even if you do not perfectly know the difference between profits and cash flow, what you have to remember is, in the cash flow like this, if you are not making any profits, and that's actually a no-brainer in this case, of course. If you are making losses, as Uber is doing, $6.7 billion here in 2020, of course you cannot have a positive operating cash flow, because, I mean, think about yourself, or think about a very small company. If a small company is not making profits, they will not generate any cash. That makes a lot of sense, right? I made two very specific videos where I'm explaining the difference between cash flow and profit and loss. So I link them in the description below, and you can see them here on the screen if you want to watch them. I will not focus on every detail between the different financial statements, because I have done it in different videos, but let's continue to see how Uber is performing. So first of all, we have learned that operating cash-wise, they are negative. So they are burning cash from the operating activities. That's the first information. Second information you have to look at after the operating activity is the second category, which is called investing cash flow. So what is the investing cash flow? Well, it's a no-brainer. It means, did the company did they make any cash by selling some investment? Let's say, imagine they sold a building or something. That would be positive here in the investing cash flow. Or most of the time, if you are investing in research and development and all these kind of things, or if you are buying another company, it's going to pop up here in the investing cash flow as negative. So here you can see that the investing cash flow in 2020 is even more negative than in 2019. It's 2.9 billion negative, which means they have burned a lot of cash here as well in the investing activity. And now let's try to understand why. Well, the most eye-popping is here. First of all, they have invested in some property and equipment, and they have also purchased some marketable securities. So they have been on the stock exchange buying some investment properties or these kind of things, okay? And then what is also interesting is acquisition of business. They have paid 1.5 billion for a new company, okay? All these investments together leads to a big negative investing cash flow. Usually you always have a negative investing cash flow, so it's not a worrying sign because the company is getting ready for the future, usually in investing into property and equipment, for example, and investing into acquiring new businesses and these kind of things. So that's not an alarming sign, but the problem, of course, is when you look at the operating activity, which was already negative 2.7 billion, because they were not able, they are not able to generate any cash from their main activity. That's a problem. And then you add the investing activity where they have paid a lot for new businesses and these kind of things. When you take the sum of the two, that's like $5.5 billion, which is called the free cash flow. So if you take the operating minus the investing, that leads to what is called the free cash flow. And when you sum up these two numbers, they sum up to minus 5.5 billion. And so what does it mean if you have a free cash flow of $5.5 billion? Well, it means very simply that you have burned $5.5 billion of cash in 1 year. That's a huge sum, especially for a company that is this old and that is already listed on a stock exchange. So it's kind of a worrying sign. But the question now is, how are they financing all this crazy cash burning here? So this will be answered in the third section of the cash flow, which is called the financing cash flow, net cash provided by financing activities. So in the cash flow, you have the first section is always operating, second investing, and third financing. So the question is now, how were they able to finance all this mess above? Because they have been burning $5.5 billion of cash in 2020. So how did they do it? Where is the money coming from? Well, first of all, for this, we have to look at the 2 years. Last year, and when you look at the financing activity, a positive number means that you have received more cash, more financing that you have paid back financing. To give you an example, in 2019, they have received $8.9 billion of cash, which is a huge amount. So the question is, why have they received so much cash? From whom? From investors, from banks, from who gave them so much money or who lended them so much money? Well, the first thing you have to understand is Uber went public in 2019, which means they entered the stock market. And what happens when you enter the stock market, and that's the reason why companies do it, well, they sell most of their shares, and as you can see it here in 2019, proceeds from issuance of common stock upon initial public offering. You see that through the public offering, initial public offering to new investors, they were able to receive 8 billion from investors, okay? And then they also have issued a term loan and notes, which means basically they went to a bank or to the stock market again and said, okay, we need more cash than what we have received for our initial public offering, so we need more. And so they went to a bank, for example, and said, well, we need 1.2 billion in financing, so that's debt. Okay, so they have received a lot of cash from the banks, and the banks are saying, of course, well, over the next couple of years, you need to pay us back with interest. Okay, so this is what is happening basically. This is how they were able to get so much cash from financing activities. So they have done the IPO in 2019. So investors gave them a lot of cash and are expecting returns, of course, for the future. And then, of course, they have issued a loan here, term loan B. Okay. So now the question is, as you can see it, they burned a lot of this money in 2020 because, of course, they were highly negative in the operating activity. So they were losing or they were burning money in their activity. Plus, they were investing a lot of money, as you can see in my investing activity. So the 5.5 billion free cash flow burn, they have burned 5.5 in 2020. As you can see, has of course affected their cash in general. So what does it mean? Well, it means that through the 9 billion they have received in 2019, they have burned a lot inside their activity. And that's why in 2020, they have asked for more money from the investors and from banks. And as you can see it in the financing activities, they have asked for another loan here of 2.6 billion. So they are asking for a lot of money for the investors and from banks because they are burning a ton of cash. And how does it look like in total? The last part, which is also interesting, is now that you have understood the three categories, operating cash flow, investing cash flow, and financing cash flow, at the end of the period, how much cash did they have? Well, they had 12 billion in 2019, and mostly because of the 9 billion they have received in financing. And at the end of 2020, they only have 7 billion left. So as you can see, they have the cash has dropped 5 billion, and that's mostly because they are burning their cash in their operating business. So they are not making any money bringing people from A to B, and because they are also investing a ton of money, as you can see. Now, very quick recap of what we have seen in the last 15 minutes. I hope this was very helpful and easy to understand. It's not rocket science, it's just the cash flow. So don't forget, even if you don't have all this financial knowledge, if you have a publicly traded company and you see the financial statements, go to the cash flow, focus on the three categories I was mentioning, and understand what is going on. Here a quick recap. Actually, for 2020, Uber started with 12 billion of cash and ended the year with roughly 8 billion of cash. So what happened and why did it drop by 4? Well, because a lot of things happened. First of all, in the operating cash flow, we have seen that the operating cash flow was negative by 2.7 billion, which means that Uber was not able to generate any cash from their core activity, which is kind of a huge problem, because if your core activity is not generating any cash, it means that either it's a long-term project and maybe you have to get rid of the driver and save money or these kind of things using a robot or something like that, robot taxis, or maybe the business is not made to make money, and that would be a huge blow for all the investors. So operating cash flow, the first indicator when it's negative that you are maybe in trouble. Then investing cash flow is most of the time negative because companies invest in the future into new factories, new machines, new technology, and these kind of things. So that's not a big deal that it's that the investing cash flow is negative. But the problem is, of course, if you're combining two negatives, you get a lot of cash burning. Okay, so when you have operating minus investing cash flow, it leads to free cash flow, and the free cash flow is not often stated as free cash flow, but you now know it's operating minus investing, and it means in this case minus 2.7 minus 2.9, you are burning 5.6 billion of cash. So in 2020, Uber burned 5.6 billion of cash, which is a huge problem, obviously, for this company. Then, how did they finance it? Well, we said in 2019 they had their IPO, so the initial public offering, where they were able to get a lot of cash in from investors and also through banks and bank loans and these kind of things that they have to pay back, of course, in the future. That's why the financial cash flow was positive in 2019 plus in 2020, because they were asking for a lot of cash. And this is basically how they were able to finance this entire mess here. So at the end of the day, now you know how this company Uber functions. So you know they are it's a cash burning company. So personally, I would not invest in such a company because the business model is not proven yet, in my opinion. Of course, everybody loves Uber, but because it's cheaper than a taxi. Why is it cheaper? Well, because they're subsidizing the rides and are not making money. That's the problem. So now that you know all that stuff, you know how to read a company quickly in 15 minutes. So now I wanted to tell you, of course, don't forget to subscribe, don't forget to like if you like that kind of stuff. I post once a week, every Sunday, corporate finance, market finance content. So yeah, if you enjoy the ride, make sure to subscribe and to like. See you soon, guys. Enjoy, stay safe, stay smart. Bye bye, guys.